So now I want to show you something, right? Look at this. We have one touch here, two touch here, and the third touch. Now, what does this mean to you? Yes, it means that we are going to look for buying opportunities, right? What is up, traders? As always, I appreciate you tuning into my YouTube channel. In today's video, I have something very special for you guys, the Falcon trading strategy. So in today's video, we are going to focus on entry types, okay? So we have two different entry types. The first entry type is the risk entry, and the second one is the reduced risk entry. So here on the screen, I have two different examples. The first example here, this is the three-touch example. And here on the right side, this is the two-touch example. So now let us start with the three-touch example here. So now let's look at this. You see an impulse move to the downside, then a correction, then another impulse to the downside, right? But now let's look at this. We have one touch here, okay? We have the second touch and the third touch. This right here is going to be our risk entry, simply because one of the conditions have been met. We have one touch, second touch, and the third touch, right? This means that we can now enter a sell position right here, okay? But we do not just enter. We need to see a rejection candle, whether it's an engulfing candlestick to the downside or multiple rejection candlestick. Okay, so this is going to be our risk entry as we are going to enter within the structure right here, giving us the biggest risk to reward entry. So now, secondly, we are going to wait for a break of this structure right here. So when we see a break of this structure, this is another entry for us, which is the reduced risk entry. Simply because we see that this was an impulse to the downside, a correction, and once we break here, this is a confirmation that we are going to the downside. So when we enter here, this is a reduced entry because we can have a stop loss somewhere around here and our TP somewhere down there. So this is our second entry type, which is the reduced risk entry. All right. So here at the top, this one here is the risky one because as the market is around here, we are not sure if the market is going to push the upside and continue going up, right? So we are taking the risk by entering at the top of the structure right here, all right? So now let's look at the second example here. So in this case, we have an uptrending market. So we have an impulse move to the upside, then a correction, and then we have another impulse to the upside. So the same thing applies here. We have one touch down here, another touch, and the third touch down here. So once we see the third touch, this is the sign for us to enter the market, right? And then now, secondly, the reduced entry, we are going to focus on the reduced risk entry. So our reduced risk entry, we are going to enter here. Once price breaks out of this structure right here. So when price breaks out of this structure, that is when we are going to enter another buy position with a tighter stop loss. Okay. So now let's look on the third example. So this one right here, this is the two-touch example. The first example here, this is the three-touch example. So now let's focus on the two-touch example. So now this is a downtrend. We are coming from the upside, then we have a correction here, then an impulse to the downside, right? But now look at this. instead of having 3 touch, we only have 2 touch here. So instead of having 3 touches, we only have 2 touches. But now what you need to focus on is the M-type formation. Price rejected here once, came back again to retest the same level, and then rejected again to the downside. So this is the M-type formation or the V shape, right? So if you look here, you can see this is a V. This is also called the V shape, but we are all familiar with the M-type formation. You can use this entry using the M-type formation. When you're looking at this, you can see price rejected here and price again rejected here on the same level, and then started pushing to the downside, right? And again, when you see a break right here, this is another entry for us. This means that we can take another sell from here. This is going to be our reduced risk entry here with a tighter stop loss, right? All right, traders, now let's look at some chart work. So here, as you can see, we're looking at gold on 1 hour time frame. So normally I recommend that you start from a higher time frame, maybe 4 hours or on a daily time frame, okay? But now I just want to show you something quickly. So we're going to go on a 1 hour time frame and zoom in here, okay? So now look at this. We have this high at the top, okay? So now price has been pushing to the downside, as you can see, right? So now I want to show you something here, okay? So now we have this low, which has been taken out by this low right here, okay? So now I want to show you something, right? Look at this. We have 1 touch here, 2 touch here, and the 3rd touch. Now, what does this mean to you? Remember the lessons. What does this mean to you? Yes, it means that we are going to look for buying opportunities, right? So let's say, for instance, we entered a buy from here. So this is going to be our target right here, all right? So we entered a buy based on 1, 2, 3, right? So now price is currently here. Let's say maybe our stop loss is somewhere here. This is live market, by the way. This is live market. This is gold on 1 hour time frame, okay? So this is going to be our first TP here, all right? But now look at this. Here, what do you see? We have 1 touch, we have 2 touch. What does this mean? It means that we might actually have another touch at the top there. So now I want you to focus on this high right here, okay? So remember that price normally gravitates towards liquidity. So this is our swing high here. So this means that price might actually come back to give us another 3rd touch, right? Price might actually come back to give us another 3rd touch. This means that we are going to start looking for selling opportunities, right? And if you look at the bigger picture, price is coming from the top. So this means that this is going to be our correction. So now we are going to have an impulse to the downside, then a correction, and another impulse to the downside, right? So now this means that we are going to wait for price to tap to take out the liquidity above this high. We are then going to start looking for selling opportunities around there, okay? And yes, if we take a trade right here, this is a risk entry because we are going to take an entry within the structure. Look at this. Let's try to connect the dots. As you can see, we have 1, 2, 3, okay? And if we take a trade right here, this is going to be our risk entry. So yeah, guys, this is it for me today. This is the live market. So as you see, already I analyzed. So now let's wait and see what is going to happen in the market.